All right, good morning, good afternoon, good evening. We're looking at April the 16th. Uh, as you can see, I have a few trades already going on. Let me take you through my train of thought. Let's go back to the daily chart. Let's zoom into this. When I look at the daily chart, which is currently 16 hours old, we've made a lower low. We have a lower high, and I'm curious to see how is this happening? How is this becoming what it is? So I'm going to look at that on an hourly scale, and I can see on an hourly scale that we put in the low before we put in the current high, like the most recent high. And as such, since then we've been making higher highs and higher lows. We're now back to support. If I look to my left, I see support here, right? So I want to be participating in this environment. Just to go and double check something, if I look at a 4 hour, I can find myself between the current floor and the current ceiling, right? So we have an inside bar. We are currently inside of that measure bar. And so we have our ceiling, we have our floor, we're testing current support, right, all the way back to here. And so playing the bullish side of the equation as we speak would make sense. And not because we think it's going to the moon, but because we may be retesting the current high. Maybe we're striving for something like this, right? So for the time being, support is being tested and I'm buying on that pullback, right? I'm expecting a resumption to the upside from here. And so if I look at that on a 5 minute, right, I see myself at support. I see the ceiling, I see the floor, and I want to start drawing a ladder in between that ceiling and that floor. And over time, that will happen to be about 9 pips, the average over time for these lines. Right? So you're creating an environment that you recognize that is familiar. This is just a ladder. We're going up and down the ladder, and we're just using time of day to more or less call what should come next. Like who is participating and why are they here? All right, so understanding what's at play, where we are and why we're here, we know we want to be buying at support. And that's kind of what I was doing just prior to the live session. All right, so I have a handful of trades here already. Red candle, right? So that's me buying support when it's cheap. Right, so I'll take a trade right there. Let me do this right here. Right, so now we're hoping to recycle our trades in a bullish manner. All right, so if those of you following along, we want to be buying red candles, right, at the support. Right, so looking to our left, where we just came from, this zone right there, that's support for where we are, right? If we come back to this level, we want to buy coming back here. Now we just rinse and repeat, rinse and repeat. Nothing short of a miracle. We're really not trying to complicate ourselves beyond the basics. Just higher highs, higher lows, looking left and right, horizontal lines, hold a lot more. I put more confidence in the horizontal line My second best is probably diagonal, like a trend line, and my least favorite for support and resistance is probably a moving average, right? So anything that's horizontal, the price stays constant over time, right? A diagonal line, the price changes over time, and the moving average is just that. It's a moving target. Right, so here we are closing a handful of trades, and off we go. Right, it's a good feeling. Start the day with wins. I did have to close some here. I closed one trade right there. I was shorting into the low, and I bought. Oh, sorry, I had sold at this low, and then by the time I made it one box away from my entry, I closed it, and I started to play the long side instead of the short side. I'm just sitting here waiting. Oh, there's a red candle. Perfect. That's what we want. Right? Just rinse and recycle. Rinse and recycle. I saw a red candle there for a second. All right. A little bit more of this. We've been at it for, what, 7 minutes? And we've already closed some trades. Can't go wrong with a successful day. All right, so another 30 minutes, 45, maybe an hour. We'll call that a day. Go to the beach. Well, not in the Rocky Mountains because it's glacial fed water, but you know what I mean. Go enjoy yourself. A red candle. If I get one or two right there, boom. A little push lower maybe would be awesome. It's not, we're not looking for big changes, right? We're just looking for average moves that repeat consistently, without intervention, so to speak. All right, it's just a high probability outcome. We're just buying the red candle because it's on sale. You don't want to spend all of your fortunes on the one candle. You have to wait a little bit. All right, so I have most of my entries down in box number one down here, and the target are in boxes number two, right? So it's just a matter of time to see if it will go our way. And before we go in too deep, yesterday's trades, everything we did as a group yesterday worked out quite well. Remember, I left you guys over here. I told you it may go up a couple boxes, which it did. And by the same token, I said, don't touch your stop losses, don't touch your targets. And those of you that listen succeeded. I made money. So fast forward, now we're heading in the opposite direction with the same premise. A couple of boxes at a time. You'll notice I have not been taking any swing trades. Right? I'm just focusing on the 3 pips, and I'm trying to lose as fast as possible. Right? It's like training for going to trade futures. Right, so we've just recycled the trade. We've just recycled a couple of trades. Let's see if we can keep that going. Momentum. Let's keep closing trades here. The average is 9 pips over and over and over. There we go. All right, so by expecting this 9 pips, if I can just reset the box, you know, my expectations are adjusted accordingly. You know, if this is one standard move that we've just left behind, then this is the beginning of the next standard move. It makes sense to expect, without complications, at least one box. Right? And then immediately bells and whistles, all the alarms start going off if we're unable to fulfill the box. Right? You expect it to keep going, you know, sideways with a upward bias. Once it stopped going up, the bells and the whistles start to go. Right? Just like here, when it failed to continue to go down, I gave myself 9 pips to call it quits. And then I started to go long instead. Right? So pulling the plug is important. Understanding where, when, why, it's all part of the game. Right? Situationally, you have a lot of time here between that circadian rhythm, you know, between those events. You have about 30 minutes between what we expect to come next. Right, so at the top of the hour, we have the options expiry. At the bottom of the hour, we usually have a pullback of some kind. Right, and then again, in 45 minutes from now, we would expect the London fix. These are all, you know, scheduled events. Right, so here's a red candle at measured support. I want to buy that. Right, and I'm just putting one there. Actually, I'll put 2 since I am recycling. All right, so I was shorting in class with Jordy a minute ago, and then with the group, I started to play the long side. Right, so why am I playing the long side? For those that came in late, just to review. Right, on the daily, we have a lower high, we have a lower low, but we are on a green day. That's after 16 hours. All right, and I want to see how this came to be. So I look intraday, and if I use a 4-hour candlestick intraday, the most recent 4-hour candle is inside of the previous. And so this inside bar calls for us to assume the bullish bias of the measure bar. So we go against the measure bar and we expect a bullish breakout. That would be the probability, right? The low probability is a bearish break. Right? So with this in mind, I look at an hourly scale. And then we can see on an hourly scale, the most recent event was the low. And then I came in I came into work as we were coming off of the high, right? So am I retesting the high? Am I here to retest the high? Am I making higher highs and higher lows? And this was a pullback, right? Is this a pullback? Well, according to time of day, I'm expected to be participating in a pullback, right? So the next event from this is the London fix, or some call it the UK fix. And so that would typically provide volatility in the direction of the trend, right? So we're just expecting the next move. We're anticipating the next move. And there's a probability of success built in, and we're willing to adjust, right? So this is on the hourly, and when I scoop down to a 5-minute chart and I start drawing support and resistance, that starts to look like a ladder, like you see here. And then we went down a couple of rungs, and now we're thinking it may go up a couple of rungs. All right, so we're just walking our way through one step at a time. Each step gives a little bit more information, and it helps to build the story that we're trying to fulfill. All right, so here we are recycling a whole pile of trades. One more. Come on. I can just close it manually. Right, so this is it. Like, it took 20 minutes. It took 16 minutes to do a day of work. Let's buy a little bit more on the red candle. I don't want to quit just yet. All right, that's not good for the show. Let's see if I can get a pullback, some kind of move back to this or lower would be a perfect entry, and the expectation would be another box. No, we want to add and add and add to what seems to be already working, right? We don't want to, oops, it's the wrong size. We don't want to reinvent the wheel. We just want to make it turn. Here's a red candle, and I'm buying. I put 2, I put 3 there. I'm going to save 1 in case we go a little bit lower. Let me go buy over here, my other platform. All right, we're not thinking the moon, but somewhere around, 660 maybe. All right, so retesting the high. All right, a move back above the high would be adequate, would be sufficient, would be in line with expectations. And it would, I think, damage a lot of people that are shorting. Right? The market is in the business of delivering pain, so expect it. I'm going to buy a little bit more in my other account right here also. I put 2, and now I'm going to play for a breakout. Right. I'm positioned for a test of the top of the box, and the test does not necessarily break, but it could come back and entitle me to buy again. Right, so we've had a whole pile of 3-pip wins, 1 9-pip loss. All right, this is actually 7 pips of loss, so $3.95. It's not a bad size loss. There we go. Nice and easy. All right, see. I need a red candle to participate. Oh, there's one. And how many trades do I have here? I got 5 already. I'm gonna pace myself and wait. I don't want to ruin a good thing. All right, so I had to close a couple or all of them so I can recycle all of them. I already have spent the money that belongs in this box. And so the only way to spend more money is to have it come into this area here. And you can do this with your eyes closed. Right? Just put an alarm there and you'll know exactly what to do when the price gets there, when the alarm goes off. Right? Plan A, plan B, plan C. Most people, they create one plan and they set it up with one target that's twice as far as their stop loss, and they walk away and they hope and pray that everything works out. Right? We create an alternative outcome. We split up that risk into many, many, many small trades. Spread those small trades like you would spread butter on toast. We know the size of the toast, right? It's always the same. It's always the same number of clicks. And so the thickness of our butter is always the same over the same amount of area, right? So it's potential average yield, right? That's kind of what we shoot for. We have an average, and once you get there, you leave the casino, right? Just like I should have left 5 minutes ago, right? When I met my average wins for the day. But ideally, you strive for excellence. You know, you're trying to be, maybe 1% better every day. You're not trying to reinvent the wheel every day. Right? So let's see if I get to spend clicks down here while I am on hold with these trades up there. Right? 5, yeah. All right, so if we get into this original box down here, it will entitle me to start clicking 4 more clicks, maybe 5. All right. Let's see where it goes a little bit further. I want to see it go down so I can pick up some. I'm really anxious to get a good deal. I like it on sale. Right? Most people are buying when it's green at the very, very top, only to see it turn red within a bar or two. And so by putting yourself in, you know, the retail trader's mind, when they're chasing something at the top, somebody has to deliver it to them. That's us, right? So when they're buying it at the top, it's because we sold it to them. And when they're selling it on the way down, they're selling it to people like you and I who are buying it. Right? If I can't wait to buy here. I'm itching to buy. Right? And somebody out there somewhere is itching to sell because they only see red, 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 red. All right, so there's 1. This will be 2. This will be 3, and 4 will be the bottom of the box. So there's 2. All right, somewhere in this zone here. If we get it down here in this area, that will be click number 3. That's basically plan C. If I can get it down to the bottom of the box, that's plan D. and I'm willing to participate all the way down there. Right? Remember that 4-hour candle? Right? The inside bar, the measure bar was green. All right, let's go double check that. Just so you see what I see. All right. We are measuring ourselves currently against the measure bar which precedes us. Right? The high is 2 boxes away, while the low is 2 boxes away. We are at 50% of that measure bar. Right? And technical analysis calls for assuming the measure bar bias. And so if the measure bar is green, the inside bar must assume the green bias. And so we're buying as we're pulling down. I just want to spread my wares. I want to spread my money so it's not all stuck in one chunk in one location. Right? This is spreading that butter across the toast. Another 30 minutes or so, and we would expect most of this to have worked out favorably. All right, this is plan C coming up. Patiently waiting, see if I can buy it real cheap, like 60% off. Is it 60% off? Oh, it is. It's almost 70% off. Can't go wrong with that. That's a deal. Ooh, I was too late. I tried to pick the bottom of the candle and instead I got waffled in. That's okay. No biggie, no biggie. All right, so let's see if we can recycle some of these trades now. Right? Can we recycle plan C, plan B, plan A? We want to see some of these trades close. Right? If it pushes into box number 3, so another box, that opens us up to 4 more clicks. Right? Same managed environment. Right? Here's that click right there. Boom. Right, so you can see where my average is compared to the current price. Right, my average is 1 box away, 8 pips away. Right, that's an average move in line with the markets making higher highs and higher lows. Right, so I put a tripwire in front of the market's intended direction, which I expect is somewhere up there. Right. If we're wrong, we try and fix it, right? The fix is moving this white line, moving this average. I control where that line is. Remember the inside bar? That's just one, this is just one way of looking at things. If you look, you could create a time frame, go to a 3-hour chart, and this is not an inside bar anymore. Right? If you go to a 2-hour chart, we have an inside bar again. If we go to a 1-hour chart, we just have a pullback. Right? We have a 3-box pullback. And where did we pull back to? Looking left, we came back to some kind of support slash resistance. It may go down, it may, and that would entitle us to spend more money. If it goes up, it will close some of our existing trades. You know, it's an alternative with an alternative built in. Mhm. Come on. You're looking to see if the bottom of the box will hold. Right. On our 5-minute chart, are we going up the ladder or down the ladder? Right. Let's reset this so we get a better view. Right. So we haven't gone anywhere really. We've gone up one wrong, down one wrong, up one wrong, down one wrong. No, the proof will be in the pudding in a few minutes. Are we going to break to the top, or are we going to find our way all the way to the bottom and fulfill an average daily range? So, as we speak, we've only done 51 pips, and the average is 68. Oh, sorry, wrong chart. That's important. Our average is 61, and we've made it to 51, so we are missing a box. We're trying to figure out, are we going to add those missing 10 pips to the top, or are we going to add those missing 10 pips to the bottom? It's a probability assessment, and the probabilities shift with more data that we receive. You know, sometimes the news is the catalyst, sometimes there is no news, and price action is clear as day. You know, that's tricky because if everybody sees the same thing, you should be scared, right? That's when the market will cause the most pain, right? That's when it has the most viable targets. So, yeah, be careful of pulling the trigger if it's so clearly visible. Like if it's such a good looking trade, you're not the only one that sees it. All right, so what do I have on now? I have 9. I'm allowed one more. I'll take it right now. All right, so what have I done? Well, I've created a long position. Basically, I'm attempting to see if we're gonna test the top side here and maybe break this and go up one more rung. Yeah, I want this right around there. Right, so is the bottom going to hold? That's kind of the question that I have, right? Am I going to be spending money in box number 3? Right. Box number 3 is the same as box number 2. right? It's there to be averaged with box number one, and combined, you're trying to get out at break even. Right? It's an engineered move. You're fabricating the exit that you are looking for, right? And by the same token, anything can happen. We could be totally off here, and it just continues to flop right into my stop losses. Right? I'm I can't control the weather, just like I can't control the market. I can only control my behavior when I'm confronted with this. So this is why I create these alternative outcomes before being confronted with the alternatives, whichever one I may be faced with. Right? This is it. It's get rid of the fear of the unknown and just welcome the unknown. I have a plan for it. Que sera, sera. I almost live my life by that. You know, I do have to control my behavior, my emotions, or they control me. Support/resistance is identified just because of what the price did before, right? That's the simple, it's easy, it's clue, it's just that it can't get any easier than that. The outcome of that bounce is either the beginning of some huge move or one bar in your pocket. And so, pick your battles. I choose to pick one bar instead of hoping that it's the beginning of some huge move. Right? Every time I hoped for the beginning of something, I find myself to be wrong. And so I'm better off by not expecting and just taking it as is. Que sera, sera. Come on, couple more. All right, couple more ticks. Speaking of a couple more ticks, I'm hoping to trade futures tomorrow night, and I'll be going online in the community here, within our little small group, 7:30 my time, which is 9:30 Eastern, maybe for an hour, maybe less. We'll see. I'll be trading MNQ. We'll take it from there. There we are. Right, we haven't closed the trade yet, so I can't recycle any yet in this current environment. I have to wait and see if I'm spending more money. Anything can happen, which is kind of cool. That's the best part about trading. Complacency breeds content. Well, there's no time for complacency here. I'm never really content. I'm always looking for the next trade, the next improvement, the next 1% change that I can implement. like cutting back on the swing trades, and all of a sudden the account just cruises. Right? As soon as I start looking at swing trades, I start to fumble, I trip. It's like I tie my shoelaces to each other. All right, so we made a slightly higher high and a slightly higher low. Will this hold? Right? Will that slightly higher low, will we fulfill this? Trying to survive the long haul requires you leave the casino every day. I sound like a broken record. Every video I've posted has had the same storyline. Right? Check your calendar, check your daily chart, check your hourly chart, check your 5-minute chart, and trade what you see through the box. And so one step leads to the other, much like an airplane pilot takes the airplane off the ground. They follow the checklist. Our checklist leads us to clicking our mouse. Once you're in that trade, you have to do your darndest to manage it. This is where we spread the risk. Right? Bottom of the box, I think I'm already at 10, so I can't do anymore. I have to wait and see if I get to spend 4 or 5 more down here. Right? Measured environment. If I measure from the top, what does that give me? If I measure from the top, we have a little bit of room left, right? Which would create a lower low, take out some stops, volatility, kind of inducing move. Right? The box is a measuring tool. It has no guarantee, it has no certainty built in. It doesn't have, any kind of crystal ball additives. I don't put, crystal ball fluid in it. It's just what it is, It allows me to filter the information. And that's really all I'm trying to do, I'm trying to filter good probabilities from bad probabilities. And with years of poor judgment, I've built up this intrinsic memory, what hurts and what doesn't hurt. That becomes a playbook. There we go. That's kind of what we want to see. Right, if I can see red, I'll recycle this trade here. Right, so we made a bunch of assumptions along the way down. Right? On the way down, we assumed where support may have been, and we took a buy each time. We were proven wrong multiple times, and yet we continued to buy. And eventually, we found the support we were looking for. Not we, but the market was looking for. It entitled us to spend 10 clicks along the way. We postponed that gratification, and now we're getting paid for it. Right? So let's see if this actually holds water. Let's see how far we can get out of this. All right, simple Molson. Keep it simple, simple, simple. So now assume this is a low, and put your box on that low. And now we anticipate what the market is capable of, all by itself with no intervention. This is it here, right? It should be able to break out of the box and deliver another box. And if it does so problem free, maybe it can do it multiple times. If it fails to go up, we're going to be testing support again, and it will fail, and we'll go down into this environment instead. It can't, you have to deal with one or the other, and in our mind, we create the alternative for each. And so I don't really care what happens, I'm ready. There we are. Right, this kind of supports our hypothesis, right? Going up the ladder. How far are the rungs? About 7 pips here. 8.5. 10. The average is about 9 pips. Right, so we're not looking to change the strategy much from day to day. We're just trying to, reach into the tool bag, pull out the tool that's required for today. And then, give yourself a few months of practice of, poor judgment, create a library of what not to do, and keep going. Right? Again, this could be flawed and we end up going down. Right? I'm of the mindset that because of what's happened here, higher highs, higher lows, and the fact that we're holding support, as long as we hold support, there's a chance that we keep going up. All right, so a measured environment, our box, our unit of measure doesn't change. Our behavior with this box is what is adapted to the situation. And even that tries to be as consistent as possible. Right? I force myself to add to my winners. I force myself to reconsider my bias when I'm running out of time. And I force myself to stay with my bias for up to 4 boxes if I feel it necessary. Right? Unlike this morning when I thought I was wrong and I took a loss immediately instead of fighting, trying to go short here. Right? I'd still be holding on to this short. It would not have closed yet. Instead, I took 7 pips of loss and I've been playing the long side ever since. One loss freed me up all morning, and it's allowed me to make money instead of sitting here hoping that it turns around. Right? I was selling here trying to make 3 pips. Right? I was just trying to go an inch lower on this chart, and in 2.5 hours, in 2 hours or 1 hour, it hasn't even attempted. Right? I'm really glad I lost when I lost. And why did I lose here? because it was 2 boxes or 3 boxes, sorry. And it was bouncing, 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 bouncing. It was unable to keep going. All right, so fast forward, now it's an hour and a half later. My bias is the flip side to what I started with this morning. Right? I traded this until the bottom, and then I traded the rest. Right? It's okay to make mistakes. It's not okay to stay with your mistake. Right? When it failed to go into box number 4 after falling 3 boxes already, the clue is okay, maybe we're going the other way. For now, I'll always have to throw that out there. I'll be posting this video sometime around lunchtime, like I did yesterday. Getting back on track. For those in wondering, C Trader, if it's any different than the other platforms, this is MT5. They also have MT5 if you're into that platform. You can buy a couple here on MT5 and see if we can test that. And then if you prefer MT4, they also have MT4. Same idea. I'm gonna buy a little bit here. Not because I think it's going to the moon, but just because it might be worth a bounce. Right? 1 minute, 5 minutes, 1 minute, 5 minutes, 1 minute, 5 minutes. Yeah, with this particular broker, I'm having a blast with these newer, cheaper fees. The commission for trading the euro is down to $6 per lot. Gold has been reduced also. And so, for those of us that have a high turnover, this is definitely beneficial. We make more money by not having to change a single thing. Oops, I keep resetting the box. There we go. All right, so we've closed 1, 2, 3. Let's see if I can recycle maybe one. If I get a red candle here in this area, retesting of the low. I want to buy this if I can with these 3 clicks that have been closed. There's a red candle. There's one. So now I'm left with 2. Will it get to here maybe? So I'm gonna wait. Oh, there's 3. And then I'll wait for the 4th one if we get to here. If. Right, it's we're about 5 minutes away from the top of the hour. which usually brings with it a little bit of volatility. So expect the unexpected, you know. Come on. We just want to see it go our way. One or two boxes. Well, we've been range trading all morning. It'd be nice to see a breakout of this range. Either way, I don't care. I'm not picky. Today is the 16th. We're about halfway through the month. Just thinking ahead. The end of the month is something we have to keep an eye on. You know, the flow, month-end flow. I'm wondering where we'll be. The euro is stuck in a range. We are, let's go take a peek, even on the weekly. On the weekly, we're kind of range bound, you know, between '09 and '07, '06, maybe even '05. '05, yeah, we're range bound. '05 and uh, '08. Yeah, push it up. Yeah, '08. '08 and '05, 300 pip range. There's downside to be had still. Lots of downside space left. Right? But for now, the facts tell us we're at support. We're testing for support. And if we find it, uh, we'll be out of our trades very shortly. This is me repurchasing two more. So what am I at now? I'm at 11. I have one too many. I have one too many trades in this environment here. So if I'm entitled to four or more, 4 or 5 in this lower box, let's line that up. Something like that. It lines us up with this area, this zone right here. It's a big if, but you never know. Anything can happen. If you can't beat them, join them. All right. If I couldn't keep shorting, I ended up going long instead. Let's see if I was right. I'm curious to see how the day will end next hour or so, how the European session will end. Slow and steady. Slow and steady. Nothing major, nothing, nothing that will rock our world. We just want to maintain cruising altitude, cruising speed, just cruise. Just do it logically. There we go. There we go. Right, so are we going to recycle this? If I see a red candle, I will. Slow and steady. Oh, I muted the squawk earlier. That's why it's been so quiet. At 9:30, we have bill auctions coming through, and then in 1.5 hours from now, we have an ECB speaker, and then in 2 hours from now, there's a whole bunch of Fed speakers and Mr. Powell. Right, so if you're trading right now, be flat in 2 hours. You have 2 hours to get out of whatever it is you're working on right now. Okay? There it is. Here's a red candle. Boom, boom. I'm at 10, so I'll stay at 10. Oh, yeah. Come on. Keep it pushing. Just like that. Yes, yes. That is kind of what we want to see, right? Ultimately, I don't care if it makes a new high, just close me out of my trades. All right, couple more minutes, or another box. That'd be fantastic. Just like that. Trying to make space for all this stuff. Gold is on the tear right now. Gold is back to 23.90. Wow, wow. Volatility has returned. It's kind of nice. So here's a big red candle. Let's recycle one. How many do I need? I need one more. So now I'm back to 10 again. Let's see what this look like. This is 3, oh sorry, I wanted 3 hours. Four hours. There we go. All right, we still have our inside bar. We made a low to support. And let's see if we can push back off of these lows and continue upward. All right, so when we look at this on a 5-minute chart, that ladder that we have, we should be starting to climb up the ladder. I haven't gone sideways 18 pips for 2 hours. It's almost time that we bust a move. There we are. That's what we're looking for. More of the same would be welcome anytime. There we are. Let's see, can I recycle some? I need a red candle. I need a red candle. All right, so there you go. The edge of the box, we pushed through the box and then we retraced back to the edge. I'll buy that retracement right there. All right, so I bought the edge of the box and I put the 3 trades that recycled. All right, so the thinking is this is some kind of support, right? It's not a game of accuracy, it's a game of excellence. Right? I'm just in the right neighborhood to get the outcome that I'm looking for. Oh yeah, gold is making new high, 23.92. Can we close some more trades? All right, red candle. What do I have open? I have 9. I'll put one more. I'm at 10. I'm just trying to manage the same number of clicks throughout. Another 20 minutes or so, and I'll have to let you go. This is so awesome. You know, when the plan just works, you know, what do I have to complain about? What do I have to complain about? You know, I'm super grateful for everything that's happened here. Years of poor judgment are finally starting to pay off. I'm just trying to clean up the mess, get rid of the lines that I don't need. There we go. Just for the sake of simplicity, what if I went to I want to go here, go here, go here, and there we go. So now I've hidden my targets because I want them to get hit anyway, so I'm not going to be moving them. But I kept the stop losses. The stop losses should still be visible, or are they not visible? I was kind of hoping the stop losses, oh no, it's both. Never mind, bad idea. I don't want to be tempted to move the targets, so I'm trying to make them invisible somehow while keeping the stop losses accessible. There they are. All right, so if I take the targets out of my line of sight, I'm just here to execute. I'm not here to mess around with the execution. And it's been working, right? It's just it's an active kind of way of trading. I have to keep reinforcing the thought of not messing up a good thing. All right, so here's that little pullback on the 5-minute chart. That's an entry on the 5-minute chart. All right, so if you had clicks to spend right here, right now would be a good place to do it. Right around here. Okay, and if we're wrong, then the next level is somewhere around this zone, and then you have somewhere around this zone, and ultimately the bottom of the box, right? 4 to 5 clicks per box, over and over and over. My broken record. All right, another 15 minutes, and we'll have to call it a day. We're hoping to see what will come of this next. We're only looking for 9 more pips. This should happen in the blink of an eye. It could happen in the blink of an eye. I have to stop using the word should. Start using the word could instead. Right, 50% retracement, 61% retracement. 61% retracement. Time to go.
Fed bids for 52-week bills total $3.1 billion.
Yeah. Successful day. I like it. All right, those of you following along, we've had a handful of winners. And if you have trades remaining open, don't touch anything. Leave your targets where they are. You leave your stop losses where they are. Just let it unfold. Right. We have a higher high. We intend, or we hope, expect, we want to see a higher low. There we are. Come on. Intermediate moves, right? That's kind of what we're trading. A range within a range, or a trend within a trend. If you consider the 1 minute bar to be a range, it has its own high, its own low, itself is within a 5 minute floor and ceiling, which in and of itself is within a higher time frame floor and ceiling, and so on and so forth. Right? Everybody's a range trader, except some people refuse to admit it. Let's see what comes of this next. The difference between drawdown and the loss is what we make of it, right? I choose to book the loss from drawdown, right? It's a transition from drawdown to an actual physical money gone type of environment, right? The loss is realized. And so there's a difference between realized and unrealized. This work in progress opens the door to a ton of flexibility. And you have to practice it. You have to practice in that discretionary environment. It's by making those mistakes that you figure out what works for you and the kind of stuff yourself don't want to ever do again. Trial and error. Right? So if this is a low right here, there's a really good chance that it can move up a box. Right? By the same token, if it's not a low, there's a good chance we come back to the low. Right? Situational awareness. Look around, especially to the left. Right, 10 more minutes. I'll have to let you guys go.
In 10 minutes' time, at 11:30 a.m. Eastern, the US sells $46 billion in 52-week bills. Prior high yield 4.81%. Prior bid to cover 2.88.
That was loud. All right, so is this a spot to buy right there? And we'll just put one. Right. Testing an assumption. Could be totally wrong. If we go into box number 3, that will open me up to more clicks. All right, so on the way to here. If we do a Fibonacci on that, that's probably near 61%. All right, so right around here, 61%. And that is probably something like one box away. Whoa, it's a half a box. That's doable. Right, that's not that far away to go find support. All right, so here I am, box number 3. Let's put it, let's draw it. This is box number 1 right there. This is box number 2 right there. And this is box number 3 right here. Come on. There we go. All right, so looking left, what do we have for support / resistance? Wow. I've got this. I've got this. I've got that, which happens to be this one right there. We'll leave it for that. Leave it there for now. Just like so. All right, so I have this rung coming up. I have this one at the bottom of the box, coincidentally. All right, so that's one, sorry, that's one click. Let's see. Slow down with spending the money here. There we go. That's what we want. It's all about the recycling. That's a lovely bar. So I'm just going to move this right there and see if we can stay in this new box. Otherwise, I can always put it back. Actually, Let's leave that one there and put one here instead. Five more minutes. And you'll be on your own. So let's go double check that 4-hour candle again. You know, that hypothesis we were working off of.
In 5 minutes time at 11:30 a.m. Eastern, the US sells 46 billion in 52-week bills. Prior high yield 4.81%. Prior bid to cover 2.88.
Right, so postponing gratification and waiting to get paid in that direction. All right. Postponing gratification is the toughest thing. It's this fear of the unknown grabs and holds on, and then you have to train yourself to understand it's not real. You know, we have a hand in the say in what comes next. We do kind of support the outcome. You know, we do engineer the outcome in a roundabout way. Come on, more of the same. Right? We want more of the same. We just want to close the trades that we have already opened. I'm really not planning on, you know, trading all day long if I can avoid it. Right? If I can get back to the high or near the high or retesting of the high, so on and so forth. You know, this right there, that's enough to say, you know, I quit for today. Let's go to 5 minutes. Remember the ladder that we built? Looks like we're testing it. You know, we're testing the extremes on both sides. We have to see what comes up next. What comes next of this. There we are.
Shortly expecting the results of the 52-week bill option, I'll lead with the high yield.
Where's my squawk box? There it is. Let's see what comes of this bond auction.
Societe Generale raises China's 2024 GDP forecast to 5% versus prior forecast of 4.7% after China's first quarter GDP data.
Uh, 9:30. Gonna have to let you go in a couple of minutes here. I have stuff I need to do. But we have a plan. We know how to deal with it. You know, so ideally, we're still looking for that move in our favor. And if we're wrong, we know when to lose. And if we're right, we have nothing to do, right? The targets will get hit on their own. Okay, so I'm gonna let you guys be. All right, trade small, trade safe. I'll see you tomorrow. Same time, hopefully similar outcome. Okay? Ciao for now. Bye-bye.